Hello from Automotive Markets. This is our hero. We'll be with you with the NFP report review. We will see the US NFP numbers and then we will check the market reaction as well. Let's go and check at the beginning the numbers and the data which published and we have right now, and then we can see how the markets reacted to this data and what can be our outlook for them. Data was the data which published, they were surprising. More than expected newly created jobs with lower unemployment level caused the US dollar to increase and stock markets also to have a positive reaction at the beginning. We had about 254,000 newly created jobs, much more than 147,000 expectations, and upward revision of 160K almost that we had in August. These numbers caused the average earnings to increase also by 0.4% on the monthly base just in September and 4% on the annual base. So higher, more labor, more jobs with higher income, which means that the people and the consumers, employees right now, they have more money to spend. More money to spend means more demand, which can make it much more harder for US Federal Reserve to control the inflation. So, which means we have to count on a higher rates for longer, not for this expectation of another 50 basis point cut in the next meetings. That can be avoided right now because 50 basis point rate cut that we had in a previous meeting, if it continues, which it can cause another inflation in the market. Let's talk about that later. First, let's check the data. Continue checking the data. Then I will talk about that on the chart when we are checking the charts. So 254,000 newly created jobs caused the unemployment level also to fall to 4.1% from 4.2% in August. That caused these numbers, they're while we have the 62.7% participant rate, which is an amazing number. I mean, that means that the more people right now, they are actively in the labor market. While we have more people actively in the labor market, still the unemployment level fell to 4.1%. That showed the very strong US labor market. That confirms the US labor market is very strong, and we can still count on this market, and we can count that this market can somehow survive the higher rates. Okay, so 4.1% unemployment level, 254,000 newly created job, and 4% annually, 0.4% monthly average earnings. Great numbers. So let's see what is the market reaction to such a great numbers in the US labor market. We can start with US dollar. Yeah, US dollar. Let's check with US dollar. US index. US dollar increased. Can continue further. Not so fast, but still the higher rates can still continue. Because why? Because with these higher rates that right now we have, if last month in September, Federal Reserve cut the rates by 50 basis points. That sent a signal of possible another. After that, in the press conference that we had and in speeches that we had, they sent somehow another signal that maybe we can have another 50 basis point rate cut in November or December meeting. That causes such a big pressure on the US dollar to fall to even under 100 mark. But now with these numbers, we can say that, okay, Federal Reserve will not have any other reason to cut the rates by more than 50 basis points at the biggest, the maximum level. But still, these numbers means that the Federal Reserve also may cut the rates just only one time and with 125 basis point before year end. And we will not even have another 2 basis point rate cut. So these numbers can support less rate cut, can support the higher for longer, which means the stronger US dollar. So the US dollar increased after these numbers. Can continue further, very likely, more than these levels, very likely, but still, because still the central bank also already cut the rate by 50 basis points. So we cannot expect the US dollar to increase to 103 or 104 marks, but now we cannot count also to US dollar to fall under 100 mark as well. So US dollar 101, 102 can be very satisfied number for now for US dollar index. This is what we're expecting to see. Higher, or we can say that more stronger US dollar put the pressure on the gold price. So stronger while we're trading the gold against US dollar. So stronger US dollar means weaker gold, but still we have a very high geopolitical tensions across the board, which means the gold safe haven still can have more demand, which is not going to be such a big negative impact, and that's not going to have such a big negative impact on the gold price. But still, it cannot. It doesn't mean that the gold also can increase further, because these numbers means also the economy is fine. So we do not need to have more fear. We don't want to see like we don't need to say, okay, the US economy is going to face with another crisis. At least these numbers say that the crisis is not on the table. So if there is no crisis, there is no fear, such a bigger fear. So it means that the less demand for for gold safe haven, but still geopolitical tension still can hold the demand. So these numbers means that the gold uptrend at this level can be ended, but downward, no. Why? Because as I told, the geopolitical tension and the earnings that we have starting next week, that they are both can hold the gold demand. So even if we have a correction, that cannot be such a big correction. Still, the reasons why, because of the reasons I mentioned. On the oil market or the energy market generally, especially with the geopolitical tension in the Middle East, we cannot expect even the stronger US dollar to have a negative impact on the gold negative impact on the oil price right now, because oil price right now is driving by the geopolitical tension, even not with the demand and supply. On the stock markets, okay, that's what I was going to explain. Last 50 basis point rate cut that we had in the September meeting sent such a signal that probably we are going to see a crisis in the market. Probably we are going to see such a big fall in the economy, because the economy is facing with the challenges. That's why the central bank cut the rates by 50 basis points, and when you had some signals that probably we can continue such a big rate cut in the next meetings as well. That caused somehow fear in the market, fear of the recession, fear of the collapse in the economy. So many people, they started to selling the stocks. So that caused a negative impact on the stock market slowly, and that was going to go fall further. But these numbers means that signal, that kind of the fear that we had in the market, we don't want to see that anymore. We don't need to see that anymore, actually, because economy, when you have a less unemployment, it means that the more people they are working. When more people they are working, it means that there is more production, there is more sale, there is more buyers, more sellers, more retail sales, improving the GDP. So labor markets actually is kind of, we can say that it's one of the best non-filter economic data that can show us the health of the economy. So with the unemployment level at the 4.1% in United States, at the current condition, we can say that the economy is improving very well, and we can count on that economy still, at least in the midterm. So that was the reason that why the stock market increased. Even though these numbers means that the higher rates can stay for longer, but still at the same time, these numbers also confirm that the higher rates are already adjusted in the markets, and markets already kind of get used to these higher rates, and they are not afraid of higher rates for longer. So the market can somehow handle these rates, which means the positive reaction in the stock market. But just be careful. It doesn't mean that the currently slow down trend in the market can change And the uptrend that we saw, the increasing the prices we saw in the last 1 hour can continue further. No, that doesn't mean that, because we already had a 50 basis point rate cut. Okay, we had a good numbers in last month, yeah, okay, but now we had a good numbers in the labor market, which means that we are not going to see another 50 basis point rate cut, which is not a negative, which is not a positive news for the stock market. So continuing falling the prices further is out of the table. Continuing falling the, I mean, increasing the prices further, increasing, not falling, sorry, increasing the prices is out of the table. But falling the prices also with such a big improvement in the economy is not going to be so fast. So slight downtrend with these. The conclusion of this conversation means that slight downtrend in the US stock markets, in the gold side movement before next round. For oil, depend on the geopolitical tensions. For US dollar index, downtrend is already avoided. We can avoid the downtrend right now, but the uptrend, not such a big fan of the uptrend, because we already had a 50 basis point rate cut, so the rates are down. So we have a less lower yields. It does, which is not going to support the US dollar upward movement. But still, geopolitical tension also can change the idea. And if you have a higher tensions in the market, it can increase the US dollar demand as well, and can continue US dollar further. I mean, US dollar index to go higher. But still, with this economic data, okay, 101, 102 is normal numbers to see for the US dollar index. This is what happened. This is the numbers and the market reactions. If you had any other question, don't hesitate to write in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye.